The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you.
Welcome to another edition of the JMF Advisors Show. I'm Kristi Moore, along with my colleague, Lauren Roberts.
Hi, Kristi.
Thank you for joining today.
Yeah.
We've got a topic for you today that I think will be very helpful for a lot of small business owners or self-employed people that may be looking to get started or looking to do a better job on record keeping.
Yes.
So we want to give some information that'll help you out. We're covering today the income tax requirements and reporting for self-employed individuals, typically on a Schedule C. If you've received a 1099 NEC to report non-employee compensation or independent contract work, a lot of times you'll need to report that on a Schedule C. So we've got a lot of self-employed clients and people starting businesses or doing side work, and we're going to give some advice on things that you can do to make your life and your accountant's life easier. If you've got a small venture that's not very complex, you're kind of just getting started, a side gig, or just doing something on the side. You've got a 8 to 5, but you just starting out something small and it's not grown into anything big yet. Some of these topics may not be for you, but it's a good idea to keep them front of mind should they become a larger venture in the future, and that's what we hope for you. So typically, self-employed people, you have several options about how you operate your business. Just as an individual, like I said, if you're smaller and not looking to formalize it just yet. Typically, we refer to those as sole proprietors or self-employed individuals. And then some people choose to form an LLC, and that provides, a level of liability protection. An attorney can advise you on whether they see that being a good idea or not. Lauren had a good example when we were preparing.
Yes, sometimes, you have your day job, but sometimes you may have other talents where you give lessons on the side or something like that. And say you're giving painting or music lessons, there may not be a lot of liability. I guess someone could sue you if they don't think they're Picasso level or something, but that's not likely. Yeah. But if you're doing something physical, like you're a physical trainer on the side or something where somebody could get injured, you would want that liability protection.
That's right. So again, talk to your attorney, see if that's a good idea. And then with forming an entity or choosing not to, there's some other things to consider.
Yes. So if you're going to remain an individual, which you can function as a sole proprietor, is what they call it, or you form a single member LLC, you want to get an EIN. And you can easily get this, which is an employer identification number from the IRS.gov website. If you're not going to form an entity like an LLC, you'll be a sole proprietor, or you can do as a single member LLC. And it's really easy. You just go through the steps and it gives you an EIN at the end of it and you're good to go. And you need the EIN if you want to open a bank account or if you want to have payroll.
That's right.
You need both.
That's right. Well, and like we talked about, if somebody's going to issue a 1099 to you, you may not want to give them your Social Security number. So having that tax ID number would be helpful.
Yeah, it's not good to give your Social Security number out. So that is nice to have an EIN, which is a little bit more protection for you.
That's right.
So Kristi, so you are heavily involved in our client service department, overlooking that department. So we have a ton of bookkeeping clients. And what do you usually advise them to get to help them track their income and expenses?
Well, there are several different mechanisms for tracking. As you've seen, there are some simple methods. And then as you grow into a larger business, there's a little bit more detail needed, depending on your level of activity. There may be some different information that your accountant needs. So there'll be some options that we provide to you that are a little bit more costly, but they do provide better information. So one of the easiest options, we say easy, is an Excel spreadsheet. So there are options for downloading transactions from your bank account.
Yes.
And you can summarize those by category. We'll talk about some of those expense categories coming up. But an Excel spreadsheet's one simple and cost-effective way to keep up with your transactions. I always say it's a good idea to keep up with it throughout the year. Don't wait till the end of the year. Oh no, it's tax time. Let me do a year's worth of transactions at once, because you may not remember in February 2023 what you did in January 2022.
Yes.
So it's a good idea to stay on top of it. So Excel is one option that you could summarize by category like we talked about. QuickBooks is a common option that a lot of people have heard of. You know, you see it advertised on TV and your friends probably use it. There are apps on your phone for something as simple as their self-employed version. And then there are desktop applications, and there's online more advanced subscriptions.
And what's the general cost of QuickBooks? 'Cause
Okay.
I know they have, they're the best in the business.
That's
so
right.
There's quite a bit of a cost
Yeah,
sometimes.
that's right. And that's a loaded question because it depends. It depends on what you're looking for. So that the most cost-effective option for QuickBooks Online is that self-employed version that I mentioned, and it's roughly $15 a month right now. And then as you get into needing a little bit more advanced level things, that QuickBooks Online, well, we can talk a minute about some of the differences in those. But then, as you graduate, the monthly subscription cost can run anywhere from $30 to $85
Right.
for those online versions of QuickBooks. So the main differences are that self-employed version will allow you to sync a bank account, which all of the online versions do.
But it doesn't let you have a balance sheet, right?
That's
Which is
right.
part of the difference between a Schedule C and filing a business return is you don't have to have a balance sheet, which if you don't know what that is, which is your assets, liabilities, and equity. So you can't really track those things like if you have assets and that sort of thing. But it is kind of limited.
That's right.
And then they all have mileage tracking.
That's right. And so once you sync your bank account with any of those versions of online, you'll categorize transactions. If you want to track multiple different types of income or classes, that's when you would get into those more advanced subscriptions, which of course is more advanced cost.
Right.
But
Exactly.
But you're able to review the transactions that cleared your bank account. Typically, if you got a separate bank account, you would sync it to that, or a credit card that you have that's
Right.
Business specific. Typically, is the best idea. So you'll categorize those transactions based on some of the discussions we'll have in a minute.
And it's super important to link it to a bank account or your credit card because you're not missing transactions.
That's
They
right.
come directly. Everything that went in and out of those accounts are accounted for, which is a problem when you're a person that waits till the end of the year
That's right.
and you haven't kept up with that. Although it is, if you're doing Excel, a lot of bank accounts and credit card companies now let you download those transactions to, it's not Excel, it's usually a CSV file,
That's
which you can easily convert to Excel. So it is nice. So occasionally we get those clients that they haven't started doing anything. So I'm like, log into your bank
Start
account,
here. Yeah.
and it's usually a down arrow. And sometimes they won't let you get a whole year. Sometimes it's 90 days worth, and you have to get a few files. But it is really important to make sure you capture all of your deductions and income and that sort of thing. We don't want to miss deductions.
That's right. That's why we always say reconciling is your best friend.
Yes.
In accounting, we reconcile everything.
Yes.
But we especially want, if you're managing your own record keeping, for you to reconcile from the bank balance, and that is another way you can ensure that you've not missed any transactions.
Yes, very important.
That's right. So there's also a desktop version of QuickBooks, and that would probably be what we call the legacy
Yes.
version.
And that's changed a lot lately.
it's
So we should probably
changed.
touch on
Yeah.
that because it's no
Okay.
longer as sweet as it used to be,
That's
right?
right. That's right. I mean,
You used to
Probably
write
when-
it out 3 years.
yes.
And now
yes.
it
it's a
is-
1-year annual subscription. So I think it was starting
And what's
last
the
year.
price tag on it?
Yeah. So I think the most basic version is $550 a year
Annually.
for the
Ouch.
desktop.
And does that include payroll?
It doesn't. It doesn't.
man.
So if you have payroll to run, you've got another subscription cost for that, for the payroll subscription. And there's different levels of that depending on what you choose to do for yourself versus have them do on your behalf. Same thing with the online. The subscription cost I gave you earlier are without payroll. And so you add an additional payroll subscription. Again, they've got different
Right.
tiers of the payroll subscription where you can choose to run payroll yourself and have them do the
Yeah.
taxes, or
now
all
they can do
kinds of,
quite a bit.
yeah,
Quite a level
they
of
offer
it, for sure.
a lot of options. And probably one of the most important things when we talk about record keeping is making sure you have good records. And so that QuickBooks file is not going to be sufficient when IRS comes to
Right.
visit.
Or what
And we
about-
hope they don't come to visit, but if they do, we need more than just the transaction level amounts,
Right.
dates.
So what about the credit card statement with the
That's not enough.
Office Depot charges? That's
no,
not enough?
technically you're supposed to have
Yeah.
detailed receipts.
Yes.
And so, you're free to throw those in a file or a box or something.
Right.
A little more organized might be
Right.
helpful, but there's ways to organize those electronically, but
And
in
even
some way.
think some QuickBooks, I don't know that online offers it, but desktop, you can scan it in and link it
You
to
can
that
attach
transaction.
it. That's
But
right.
to me, that's a lot of work.
It is, yeah.
I would at least do a shoebox or something,
That's right. That's right.
time value sort of thing. But if you get audited, you don't want, if all you have is the credit card statement and your bank transactions, they may not accept that.
They
And
may
I think
not.
we even saw a court case recently where they did not. So it's important to keep the itemized receipts.
And that would be unfortunate.
Oh my goodness.
Because they won't
yeah.
they won't throw out that income, but they
Yeah,
might
they'll
throw
throw
out
out-
that
yeah.
those expenses, and
Ouch.
that would be very costly.
Mm-hmm.
Anything else to
Exactly.
cover in QuickBooks area?
I don't think so. I think
And
we
when
are
we say
good.
QuickBooks, it doesn't have to be QuickBooks. I mean,
Yeah.
there are others out there that are growing in popularity. I
Yes.
mean, there are some that are industry-specific softwares
Mm-hmm.
that have really ramped up their accounting programs, and some that will integrate with your point-of-sale system, or whatever.
Inventory and that sort of thing.
That's right. So QuickBooks is not the end-all, be-all.
Yes. And
So-
there's been few, but I think, QuickBooks is such a good product and they've really hiked their prices because they
They-
know they can. I think that's allowing an opportunity for, other
For some of these-
software to come up.
That's
So
exactly right. Yeah.
we may move towards something in the future, but for right now, QuickBooks is definitely
Yeah.
really
It
good
is
product.
user-friendly. That's right.
Mm-hmm.
Well, next we want to talk about the income and expense reporting
Yes.
on the Schedule C.
Yes.
Tell us a little more about that, Lauren.
Okay, so now mainly income-wise, usually you'll get issued a 1099 NEC for non-employee compensation. And that's not always. If you're not issued a 1099 NEC and you get paid for something, you always pick up all your income. And you'll notice a lot of people don't follow the 1099 rules like they should.
That's true.
So if you're getting paid $600 or more for services, they should really be issuing you a 1099, but they may not. And to get that 1099 information, you need to fill out a W-9 for them. So that they ask you to fill it out, and you'll put your name and your EIN or social security number, but hopefully you've gotten an EIN, and your address, and then what type of entity you are. So as a Schedule C, you're one of the entities that gets a 1099. If you're a corporation or S corporation, they don't have to issue it. That's a totally different business entity. But if you're a Schedule C, you get a 1099.
Right. And those very organized customers of yours will ask for that W-9 up front before they
Yes.
issue a payment, so you can expect a 1099
And
to come.
don't be alarmed by the W-9.
right.
They really need that information to do the right thing and
That's
issue a
right.
1099.
That's right.
Yes.
So then we'll get into expenses,
Yes.
which is a loaded question. Tell us all about
Yes.
expenses that we can deduct on our Schedule
Yes,
C.
we're always asked. So the general rule is always ordinary necessary. So really any business-related expense, for the most part, we'll cover a few that are a little different. You can deduct. So oftentimes I just love the Schedule C because it actually has some expense types that
That's right.
you would report.
Mhm.
And same thing for our tax organizer. It looks kind of similar to a Schedule C.
That's right. And you can see a Schedule C on the screen
Yes.
for
So
reference.
We'll look at it. So, of course, it has the income section. And then expenses, there's advertising, there's your car and truck expenses, office expenses, supplies, rent, that sort of thing. Those are the general types. Don't you just love a client that lists $35,000 as their business expenses?
That's it.
Yes.
Here's my
Yes.
total expenses.
The IRS isn't going to love it to be listed, and that might be a red flag for them to, audit you or something. You should definitely categorize your expenses and
That's right.
report. And now, just because you don't see your expense type on page 2, there's a section for other deductions. So you have other deductions that don't fit in one of these boxes. That's totally fine, as long as they're business related and they're ordinary and necessary.
Right. They may
You
be
can
special
deduct
to
it.
your industry or something like that.
And don't forget, things like maybe you're not running for your business, but your cell phone, you want to deduct those expenses. So look at anything also you might be paying personally that is really a business expense you could be deducting. So let's move on to the auto rules. So
There are lots of those, aren't there?
yes, well, you have options there. You can take the standard mileage rate, which is 65.5 cents per mile, or you can take actual. Yes, 65. This is going to change, and it changed last year. We had 2 different
That's
rates.
right.
With the gas prices, I guess they thought we need to give a little something more.
That's right.
So yes, so you do have to think about, strategize. If it's your first year and you place a vehicle in service, you can take accelerated depreciation through bonus or 179, which gives you this really nice deduction. But if you do that in the first year, you are stuck with that vehicle using the actual deductions.
That's right. What all does that include?
So you can deduct things like, your gas, your oil changes, your tire repair, any sort of repair, depreciation, that sort of thing. And so also the standard rate is considered to cover those expenses. So that's why you can't do actual and take that big depreciation and then switch to mileage, because mileage coverage covers depreciation.
It's best to choose one or the other.
So it's
and
like
stick with
double
it.
dipping.
Yeah, that's right.
But what's not covered is interest. So if you have a car loan, the interest is not deducted, is not included in that. You can deduct it.
Okay.
Sorry, not included in that. And the taxes on it, like your car tag taxes, is not included. So there's several things that are not included. But you can only take your business mileage, and you need a log.
That's right.
So
the IRS, they want to see a log if they come to
Yes.
visit, right? Tell us about that log.
So you need to have, your destination, dates, times, and business purpose, that sort of thing, number of miles. And it's really good to have software to help keep up with that.
Yeah.
So QuickBooks does that. And also you can get like a third-party app.
That's right.
You can open it up and say, I'm heading to this client to do this, and log it, and then log it back.
Right. So when you report those miles on your tax return for the end of the year, you say, I had this many business miles that you've obtained from your log, and then you give the total miles you drove all year. So,
and we can look at, what's more beneficial, taking
right.
which the mileage rate or taking actual. Usually I generally like to go with the mileage rate. It's easier.
It is. Seems more simple to track, and it's a good benefit. It's not, it's usually a substantial amount.
Yes. And one other thing that's always confusing to people, commuting, not deductible.
That's right.
So if you have an office outside of your home, from home to office, that's commuting. That's always personal. But from office to client, that's definitely business.
What if I have a home office?
Hey, that's where it gets good. If you have a home office, that's your home office base. So anywhere outside of that to your client, or getting supplies for the business, that sort of thing, it counts as business expense.
Nice.
Exactly. So Kristi, tell me about the meals deduction. So I'm self-employed. Can I go get sushi every day for lunch and deduct it?
Well, you can have sushi for lunch every day if you'd like. However, if you're going alone or if you're going with a friend and it doesn't have a business purpose, it's not deductible for business. Yeah. And prior to 2023, meals that were at a restaurant for business purpose were 100% deductible.
Yes.
But the rule goes back to just 50% beginning in 2023.
Yes. So we're in 50% now, but that was really nice for 2021.
It was for a couple of years.
Yeah,
it was.
And I think that was COVID related to get people back out to restaurants and that
right.
sort of thing.
And so just got to make sure we have a business purpose. And I think you probably read in that court case that that's one of the things that needs to be documented is the business purpose of that meal when you choose to take it as a 50% deduction.
So I would keep that receipt and just, write, who I was with, what we discussed. That was business.
Right.
And that sort of thing.
That's right. And then what about entertainment?
Oh, that got axed, didn't it?
It did.
Tax Cuts and Jobs Act.
No more fun.
No more fun. No entertainment. That used to be, it used to be meals and entertainment was
Right.
50%. And that's, one of those things that's special, that it's 50%. And that's why we're always asking about it, because it's not 100% deduction. So entertainment got knocked down all the way to 0.
Right. Now, meals, if you're traveling on the road, say, you're on a business trip, those meals while you're traveling away from home, because you don't have the ability to.
Yes, that's right.
eat from
So
home.
if you go out by yourself,
That's right.
that you can deduct that while
That's
you're
right.
traveling away from home. And you can also do per diem for meals, where if you don't want to track it, but you are on a business related trip out of town, you can take the meals per diem rate. But you can't take lodging. That's one of the interesting things, is when you're self-employed, you always have to take actual expense for lodging.
Right. So rather than using the federal per diem for lodging, you would only use it for meals and then deduct your hotel or airline costs separately. Those are still business deductions,
Right.
just not part of the per diem.
Right.
That's right.
Exactly.
So back to the entertainment and the meals, how you give us an example of one where you could maybe take advantage of some deduction, if not all.
I see a lot of Top Golf. Top Golf is really fun.
Yeah,
It's in
that's
Birmingham. So Top Golf is entertainment, but they serve food and drinks. So, that's still deductible 50%. So you need to have your invoice where it shows, the cost for the Top Golf and then, the cost for the meals.
Broken down.
So you can
That's
still
right.
take 50% for the meals, but the Top Golf is 0%. Same for like football games and things like that, tickets to concerts and sort of thing.
Yeah.
0. However, if there's a meal involved or something, you can still take half of that.
That's right. So keep up with it, right? And the business purpose, the
Yes.
client you're taking.
Yes. Still
right.
document.
That's right. So next, tell us about a home office deduction.
The home office deduction so when you're self-employed, you can take it. Unfortunately, if you're an employee now, there's no home office deduction on a federal return, because there's no longer employee business expense. But when you're self-employed, you can deduct it. I love the simplified method because it's $5 per square foot, and you don't have to break anything out. And so a regular home office deduction is you get to do your business, whatever your square foot of your office compared to your home, whatever that percentage is, you get to deduct like utilities, mortgage interest, real estate taxes, but you're also supposed to depreciate.
That's
And
right.
we all know an issue with depreciation is you can always have to recapture it if you sell it and have a gain. You
That's
have to
right.
pick it up in income because they've let you deduct it. So I'm not very keen on depreciating a home and having to recapture it, because I think you've seen we probably both seen where it's not fun if you do have to recapture it.
That's
and
right.
It's taxable.
Because most of the time you can exclude the gain from the sale of your home.
Right.
But if you've depreciated it, that's
And if you're
unfortunate.
able to itemize, you can already deduct real estate taxes and your mortgage interest. So
That's right. So it's not too much extra benefit.
I try to stick to the simplified deduction.
I share that sentiment. Yes.
But you have both options.
That's right. That's right. Some people
We look at both.
insist.
Yes.
don't they? Yeah. Yeah. We can always look and see which
Yes.
makes more sense. And with your long-term plan for your home.
Now we're going to go off track, aren't we? So
Well,
there's
we're talk about some business expenses that don't get reported on that Schedule C form.
yes, and these are some of the biggies, some really nice ones you can have.
They can really be beneficial.
And these are reported on Schedule 1, which is right behind the 1040, and they're not on the business schedule at all. But they are business related, and you get to deduct them. Do you want to kick us off on
Sure.
those?
So we've first got self-employed health insurance deduction. And so if you are paying for you or your family's health insurance, but neither you or your spouse are eligible to be covered by an employer plan. Isn't that right?
I think if, the employer plan is a group plan and there's benefits there and that sort of thing, if you can be a part of that, they want you to do that instead of getting like a unsubsidized plan.
That's right.
Is the key
But
there.
if you are able, or not able, don't have that option, and you pay for health insurance out of your pocket, then that is a nice benefit on your tax return. And then talk to us about some of the retirement plan options, because those can be beneficial as well.
Those are. Now, you have to put the money in the plan. You have to have the money to do it, but it is nice deductions. Generally, if you're self-employed and you're not going to have any other employees, we generally recommend a SEP-IRA, which is a special self-employed plan. And it allows you to sock away up to 25% of your net profit from your business. And that's a lot.
That can be a
Yes.
nice
And the
amount
max
for those who-
amount, it does get maxed out. The max is really large amount is $66,000. We really don't see that sort of amount on
Right.
any other retirement
We don't.
plan.
That's right.
So if you're retirement minded, that's a great way to reduce your taxes. It is tax, you get a deduction for it. And then when you take it out in retirement, you do have to pay taxes on it.
That's right.
But it can be a big deduction. It's above the line. It's not subject to anything else. It's just a deduction, which is great.
That is nice.
If you have employees, you can do a simple plan. So right now, this changes annually, and same for the SEP. The max is $15,500 that you can put into it, and then it's $3,500 if you're 50 or over to catch up. And then you also, because you're an employer, you have to do a match, which generally most people do a 3% match on those who participate, which isn't bad.
Yeah, which is
And
a
you
nice
get to-
benefit to your employees too if you have
Exactly.
employees.
You want to
that are
encourage them.
That's right.
Now, there's also solo 401ks and Roth 401ks, but I'm not going to go into those a lot. They are an option, but we really don't see many people do them. But you can do them, and we can discuss it if you're interested.
That's right. There are options. And then the last one that's another deduction related to self-employed people, but not on the Schedule C, is the self-employment tax, half of the self-employment tax deduction. So that's another item that most softwares handle, but it goes on that Schedule 1 as a deduction, and it's half of whatever the self-employment tax calculates out to be.
Right.
We'll talk about that.
Yes.
That pretty tax here in just a minute.
Yes.
So that'll lead right into talking about taxes. So we've talked about the income that you've got to report and the deductions that are available to be deducted on that Schedule C or elsewhere on the tax return. What are the tax implications once you get down to that bottom line taxable income?
So it is nice with a Schedule C, you have your income and you get to take all the, appropriate deductions against that. But once you have a net profit amount, the taxation is going to be a shock. So like the first time you're filing a year, you're going to be surprised because you have to pay income taxes, and on top of that, you have to pay self-employment tax, which is those FICA taxes, consist of Social Security and Medicare. Now, when you're an employee, you get your pay stub and you see they take out 1/2 of your Social Security and Medicare amount, and your employer pays the other half.
That's right.
But now you're both.
You're both.
Your employee and your employer, and they're going to tax the full amount, which is 15.3%. And then you also have to pay income tax. So even when I see somebody with minimal income or somebody young starting out, you want to sock away about 20% when you're even in a lower income bracket. And so, if you're doing really well, you can need to do 40,
25,
getting close to 50%.
That's right.
I mean, it can really add up if you're in a top tier bracket.
And you need to plan for it, kind of like preparing records wise, you better put back some cash.
Yes.
If you see that you're making profits.
There is a Social Security cap, though, which I don't know off the top of my head now.
I don't for this year.
It's a little above $150,000. You don't have to pay in that 6.2%, which is 12.4 for both halves. So that does help once you get higher. But it's a lot for sure.
Yeah.
One more thing. Yeah.
Go ahead.
Yeah, the qualified business income deduction is another thing we have that
will help.
Yes, it helps a lot. It's also not on Schedule C. It it's calculated on a different form, the 8995, and then it's a deduction on the 1040. So it's a 20% deduction, which is really nice.
Right.
Now, if you have these biggies that are not on Schedule C, you have the SE Health, retirement, and the half. It's going to reduce, you have to back that out before you get the 20% deduction, but it's a nice deduction.
Sure.
And if you're a SSTB, which is a specified service, trade, or business, those get limited if you're really profitable.
That's right. There are some different limits to look at. As with most facets of the tax law, we've always got things that we need to be aware of, different limits and things like that. But that can be a very beneficial deduction.
And I remember one more thing.
Oh, what's that?
We forgot to mention.
Okay.
When you pay yourself, that is not a deduction.
It is not.
It's personal distribution. So you cannot count that. Don't count that in your expenses at all.
That's
if you
right.
take money out to pay yourself. You're always taxed on that net profit, whether you leave the money in or out. But if you're taking money out, it's not a deduction.
That's right. If you have employees, you can deduct those wages.
Right, exactly.
But if you're taking money out as your own, what you may consider payroll, it's really a distribution that doesn't get deducted by a self-employed Schedule C income earner.
Yes.
So can you think of anything else we missed today?
I think that's it. Just, it's important to document. It's, keep up with it.
That's right.
If you don't, you can always download your transactions, but only if you have, a separate bank account and that sort of thing.
That's right. The neater you can be with your record keeping and even,
Yes.
Your spending, like you said, tracking it all in one bank account or on one credit card, that's always helpful. And that way you don't have to go digging through all your personal things to gather that information. But consult a tax advisor early and often if you need to. But they can help with some things that are specific to you or your line of business. And we're always glad to help if anybody needs help in that area.
Yes.
And thanks for joining, Lauren.
Yes, thanks.
Very,
it's been fun.
Very helpful information. We look forward to hearing from you guys. If you have any podcast topic recommendations or have any questions about today's subject, you can email info@jmf.com. See you next time.
If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.